Well, a very, very good morning to you and a very warm welcome to another webinar that we're putting on, Herts Chamber, and in partnership with our friends and colleagues at the Hertfordshire Growth Hub. My name's John Woodruff. I'm Business Support Manager. I'll introduce the speakers in a few minutes. I do want to be very quick in this introduction because we've got a lot to get through in the hour, and I'm sure there will be loads of questions which our experts will be hopefully able to answer all of them. Just that you know, we are being recorded today. If you could please put your Q&A in the Q&A box. I'm sure you're all fully aware and au fait with all this now. So if you just put them in there, and I'll try to get through as many as we possibly can in the time. I think that's about it, really. I won't go on. Lisa Armstrong, who's Business and Strategic Development Manager at Hertfordshire Growth Hub. Lisa, I know you want to say a few words, so shall I quickly, wherever you are, you're there, shall I quickly pass over to you then I'll introduce our main panel.
Lovely, thank you very much, John. I'm just going to share my screen with a presentation. Just a very brief presentation for you. Hopefully you can all see that okay. As John said, we're delighted to be working in partnership with Hertfordshire Chamber to deliver a series of 4 webinars on EU transition. Obviously the first today is the first in that series. For many of you, you'll be familiar with the Growth Hub, but it was just an opportunity for me today to give you a little bit more information about what we do if you aren't that familiar. So the Growth Hub is led by and delivered on behalf of Hertfordshire Local Enterprise Partnership. We're delighted to deliver the contract as part of a consortium led by business support professionals Exemplis with the University of Hertfordshire and Hertfordshire Chamber of Commerce. Importantly, the support that we provide at the Growth Hub is free to access and available to all businesses. We are the central point of access for support in the county. So really to simplify business support, we work together with both publicly and privately funded partners and suppliers to bring to you a whole access of support so that we're a little bit of a one-stop shop for business advice. Just in terms of current programmes, absolutely it needs no introduction, the EU Transition Readiness Support Programme. That's why we're all here today. We have a team of 5 EU transition advisors who've joined us and they're able to work with businesses to help you understand exactly what the EU transition means for your business and the actions that you now need to take, and to guide you with advice, on-demand webinars and live events like this. Of course, we were just talking before everybody joined that a lot of businesses are still very much responding to the impact of COVID-19 on their business, and the Growth Hub since last March has developed a number of programmes and support and information to help businesses tackle that. One of those is the Volunteer Business Support Scheme that we've developed in partnership with the University of Hertfordshire. This is a network of volunteers, mentors who are providing support to business owners who have been impacted by COVID-19. It's support to adapt and pivot your business, and it provides up to 12 hours of support one-to-one for businesses. We also have our COVID-19 page and resource hub on our website. This is updated regularly with lots of information around the government support packages. And we also have, as a result of the pandemic, we've worked a lot more on online videos and on-demand events. And these really help to make support and information accessible to you at a time that suits you. They range from anything from 15 to 35 minutes on a range of subjects. We have one on EU transition, we have one on trading COVID safely, and there's lots more, so do have a look on our website. I also just wanted to tell you about our Get Growing 2 programme. The eagle-eyed among you will notice that European Union logo on the slide. This is an EU funded programme. We do work with businesses and offer a package of in-depth support through this programme. So prior to COVID, it was for businesses who were growing and scaling. Very much now we've adapted that to support businesses that would have been growing but now need a little bit of help to respond and adapt and strengthen to minimise that impact of COVID-19 on their business. So this provides in-depth support with a business advisor that will work with you to understand the issues that your business faces and put together an action plan and support you to deliver that. Of course, it's a topic of hot conversation in terms of the well-being and resilience of businesses, but also of workforces. So we're really pleased that this last year we worked very closely with the public health team at Hertfordshire County Council to pull together support aimed at really helping to bring wellbeing to the top of the agenda as a way for businesses to really get through the pandemic with their workforce and to continue to trade. The support provides a lot of advice and signposting to local support organisations. We have events and on-demand programmes, and we also have a manual that was developed in partnership with Herts County Council to help businesses and business owners to really tackle difficult conversations that you might be having with clients and suppliers and your workforce at this time. So if you're interested in any of that, it only takes a second to register on our website, and by completing a short set of questions, you'll then have immediate access to lots of resources through our knowledge bank, our marketplace, our events and on-demand videos and news and blogs. So thank you very much for your time, and I'll hand you back to John.
Thank you very much indeed, Lisa. Okay, without further ado, as I say, time is short and very precious. Can I introduce you please to our second presenter of the day, Suren Thiru, who's Head of Economics at the British Chamber of Commerce, and really are, no views were delighted, but we really are delighted. We've got Suren on board today. He, just very briefly, he's got a wide-ranging background in economics. He oversees the BCC's economics thought leadership work and is a regular commentator on the UK.
John, you've gone on mute, sorry.
Oh, yeah, I wasn't on mute, but I don't know what happened. I don't know how much you called to that, but I think we've got a speed on now anyway because of time. Suren, over to you, please.
Thank you, John. I didn't get much of that introduction, so thank you very much for the kind of introduction, and thanks once again for inviting me to join this morning's session. I'm just going to give you, I guess, our initial overview of the UK-EU trade agreement, some initial thoughts on it, both good and bad, and also give you a bit of a sense of the way forward as well. What are some of the outstanding points? What are some things we need to look for over the coming weeks and months? So the question I'm often asked is this UK-EU trade deal a good deal? And I often sit on the fence a little bit when trying to answer that question, because actually it depends and what sort of view you have, what lens you're looking through. Because if you're comparing to that deal, clearly it is a good outcome. If you compare it against previous access to the single market, clearly there are more barriers now than there were beforehand. So that's not necessarily a good outcome economically over the long term. But if you look at it from the perspective of UK and EU government, actually both of them are probably pretty happy with where the deal sat, because the key outcome for the EU in particular was to defend some of their key interests, in particular the integrity of the single market and the customs union, which they've achieved that. And for the UK government, it was around limiting the reach of EU law, and they've largely done that in the deal. So again, it depends who you're looking at in terms of whether it's viewed as a good deal. The other comment I would make overall is that when you're looking at the deal itself as a whole, it's important to distinguish between the rhetoric and the reality of the trade deal. We hear a lot of things said about the trade deal, but actually what as a business, what you need to be looking at is what's the reality behind that. That's really important. As I said, we have a deal, which is clearly important. But what's quite interesting about the deal when you look at it overall is that it looks quite, there's a lot of instability in the deal. There's a lot of scaffolding around some of the key elements of the deal. For example, there's a lot of review mechanisms where potentially some of the tariff-free access and some of the other benefits of the deal could be taken off the table. For example, there's a 5-year review of the overall trade deal. There's 12 months, each side can give 12 months notice to terminate the deal. So it'll be interesting to see how that develops going forward, because when you're looking at a business who's maybe making a 5 or 10-year investment in the UK or vice versa, that can actually impact how this is played forward going forward, because actually if you're creating quite an unstable environment for businesses looking to invest over the long term, this is where this deal tends to have some weaknesses there, because as I said, there's lots of scaffolding, there's lots of areas where the threshold for reviewing or even reducing some of the benefits of the trade deal are relatively quite high compared to other trade deals. So again, it's something to watch out for. Now, of course, when you look at the trade deal, so the key headlines that sort of sort of reach out are, of course, the headline around tariff-free access and quota-free access on both sides. And clearly that is a good outcome compared to no deal in particular, where you'd have had unilateral tariffs being applied. Again, if you look at the reality behind the rhetoric, there are a number of conditions that are tied to tariff-free access. One of the key areas is around rules of origin, which essentially is a conditions you need to meet to get tariff-free access. So actually the process to get tariff-free access is more complex than maybe sort of the headlines suggest. Now, rules of origin, I said that essentially is the rules you need to meet to get tariff-free access. There's good and bad news. So the UK have achieved bilateral accumulation, which means that parts that are made in the UK and EU can be counted as domestic input to a good. But they failed to achieve other degrees of accumulation, like diagonal accumulation, where parts are provided from other countries where UK and EU both have a trade agreement with, such as Japan. That isn't part of the deal, unfortunately, which is certainly a disappointment. When you look at some of the other areas that are positive around the deal, we have seen that both sides agreed to allow the other side to bid for public sector procurement projects, which is beneficial for both UK and EU businesses. That's clearly a good sign. We're also seeing attempts to streamline customs procedures. One of the key areas that will help here is the mutual recognition of trusted trader schemes, such as authorised economic operator. And that's clearly another benefit of the deal. That's clearly a good move going forward. On the downside, one of the biggest gaps in the trade agreement is around services. It's a significant gap within the agreement. That's particularly pertinent for the UK. So the UK economy is around 80% services. So clearly that's a huge gap, and we currently export around 30% of our exports are services exports to the EU at the moment. So clearly that's a huge gap. There's a number of areas to look within that. So firstly, business travel. The amount you can do via visa-free business travel, if you look at the list and trade agreement, is relatively small. So if you're a magician, for example, and you want to go and operate in Italy, your activity is not covered by the exemptions in the agreement. So that's clearly something you need to look at very closely when planning your work going forward. What we're also seeing is that the UK failed to achieve mutual recognition of professional qualifications. And that's a real blow to the services sector, particularly professional services. So again, if you're an architect and you want to work in Italy, you may well need to conform to their local qualification standards. So that's clearly a blow in terms of making a free, easy movement to people across the EU and free distribution of services, which is clearly a concern. Another area that's also being flagged quite strongly, and actually was moved out of the agreement, is around digital movement of data. Now, clearly that's a huge concern for a lot of businesses, particularly around GDPR. What we saw the UK and EU governments take the approach of actually moving data outside the realms of the agreement. So at the moment, the EU are deciding on something what's called data adequacy, which means they're looking at whether they think the UK regime is adequate enough to hold EU customers' data. That agreement, that sort of process is likely to conclude over the coming months. But again, it's something to watch for as you move forward. Because at the moment, there's an interim measure in place that allows data to continue to flow without costly compliance measures. But that's only lasts around 4 to 6 months. So again, it's key that needs to be looked at over the coming months. Another area is financial services. What we see with financial services is that the level of cooperation in agreements really thin. Again, financial services is a key part of the UK economy, and that's another area that's a slight concern for us going forward. Now, what may well we see with the services going forward, the agreements? Now, the challenge with getting more deeper alignment with the service sector in particular is that it crosses a lot of the red lines that both the UK and EU government have. So one of the key red lines for the UK government is free movement of people. That red line tends to limit quite a lot what you can do with professional services in particular. So it'll be interesting to see how that's sort of squared over the coming weeks and months. What you may well get is individual industries coming to specific details, for example, architects, maybe a specific agreement that's put in place to allow a greater flow of activity back and forth between the UK and the EU. So again, it's something to watch for quite closely. So I said there's good and bad points to the deal. Overall, the deal that we have in place is better than clear no deal outcome. And so what are the outstanding points and what's the points that we'll be looking at sort of going forward? Now you've seen a number of measures being put in place to try and ease the transition. So there's a number of measures around rules of origin, which means that you don't necessarily have to have the paperwork in place until later on this year, which is clearly a good outcome. But you do need to plan for when we do get to the point at the back end of this year when you'll start to need to be providing that paperwork around supplier declarations. Secondly, watching out to what happens with data adequacy. That's going to be a key area for a lot of businesses over the coming weeks and months, and make sure and watching closely when the UK and the EU eventually reach an agreement on that, and when the EU finalises its overall process. That's going to be really important going forward as we look to see what some of the challenges are with the agreement over the coming weeks and months. And with the agreement itself, we've often viewed this agreement as very much the foundation for the UK-EU trading relationship going forward. So what we saw on the 24th of December was probably the beginning of the end, not the end of the negotiation between the UK and the EU. We'd like to see a lot of the elements built up, hopefully around services, which is going to be really crucial, around data and other areas of cooperation. But that's likely determined over the coming years by the political situation, both in the EU and the UK, whether some of those red lines can be pushed a little further to get greater alignment to help with the flow of trade, both in goods and on services over the coming weeks and months. As I said, there are other areas we can look at trying to smooth the transition. One area could be looking at temporary easements around some of the costs and penalties that trawlers may face towards the end if they get paperwork wrong. I think that's something the government needs to look at very closely. Another area that we think that government should also be looking at, and this again goes back to this impact of COVID, is that they should look at maybe providing some sort of tax break for businesses who need to help fund or help them with the cost of some of the adjustments they may need to make around SME, around some of the adjustments in new arrangements. That's something we need to look at really quite closely. So overall, as I said, I think the agreement's a good starting point for a future relationship. That's really important, but it needs to be built on key areas, particularly around services. And there needs to be other areas where there's clear business engagement, particularly around some of the sort of corporate governance, the governance around the deal, the various councils that have been set up and subcommittees around services and rules of origin. That needs to have clear business engagement within that. That's going to be really important going forward. Some decisions made in these committees will impact how the trade deal works in practice over the coming years. That's something that BCC and Round Chain Network we're going to be really focused on over the coming weeks and months. And as I said, our priority is very much making sure that this agreement is built out and that we can get a smoother, more deeper trading relationship with the UK and EU that works very much on a practical level, rather than necessarily focus on the politics, which has been the last 4.5 years. And with that, I'll hand back to John. I look forward to the Q&A.
Sorry, thank you very much. Hopefully my mute button will stay, or unmute button will stay on this time. Thank you so much for that excellent analysis of where we are. So I like your note is a good starting point, but clearly there's a lot of work still to be done on this. And as you were talking, I'm just listing down some of the questions that we get constantly here. We'll have the last few weeks. There seems to be more questions and answers and so many places to go to. You're not sure really where to go to, but perhaps we can cover that off in the Q&A session. One thing I will just quickly say, you did mention GDPR. If I can at this time, just advertise our next webinar in a series which Lisa did touch upon, that will be covering GDPR, data protection and intellectual property, and that's on Tuesday the 23rd of February at the same time at 11 o'clock. It's on our website. It will be on Herts Growth Hub's website as well. Thank you so much, Suren, again. Now time to hand over for our third presentation from Ruth Corkin, who is Director of VAT and Indirect Tax Advisory at Hidea Hopkins. Ruth has more than 30 years experience working on VAT and indirect taxes. She's the technical chair of the VAT Practitioners Group and sits on numerous committees with HMRC representatives at a very high level. So probably it's fair to say that what she doesn't know about VAT is probably not worth knowing, if that makes sense. But Ruth, over to you, please.
Thank you very much for that introduction. There are still gaps in my knowledge. It never ceases to amaze me. VAT is an organic tax in particular, and customs I've done side by side with VAT for most of my career. But the preparation for this period from the 1st of January has been somewhat of a vertical learning curve for everyone, I think. So as Suren mentioned, the 24th of December, just as we were all closing shop for Christmas, such as Christmas was under COVID, out pops this deal. And I'd like to thank Mr. Johnson and Mrs. van der Leyen for some between Christmas and New Year reading, which did take some doing. And there is a deal. It works for most people, I think, at the end of the day, but you do have to be really, really careful from a VAT and customs duty point of view, which is where I'm going to focus my presentation. So I shall share my screen with you all. If I can find it, there it is. It should already be there.
Ruth, you've gone on mute, sorry.
Ruth, are you unmuted?
Yeah, I think I am now.
Lovely, great.
I must have caught my headset as I was fiddling around. So it's not a free trade deal. Goods with an origin outside the EU or UK are likely to have tariff implications. And one of the most common questions I get asked is, well, I've already paid import duty and VAT, why would I have to pay it again? And I'm afraid that is just the nature of the deal. So if you import from Japan or China and then you ship to the EU, you may well have double duty on your goods and also VAT. You have to still have some form of statement of origin to evidence your claim for the preferential tariff, which is what we're actually trading under. So that should be on your commercial invoice or a packing note or any other document other than a bill of lading. And there is a set text for that in the trade deal. It can be in any language of the EU. So it doesn't have to be in English. And I have had some discussions with software providers, couriers, the like, where they've had their declarations rejected because the statement of origin has been in a different language to English. And I've had to point out that it can be in any language. Now, I have to say the ones I've done have been in Romanian. It's not my strongest language, but you do get used to and you do pick out various sort of phrases in there. If you have goods that you are shipping either in or out of the UK or EU that have both originating and non-originating materials, you have to look at the proportions of them. The trade deal does have an awful lot in there about how you calculate that, but the kind of rule of thumb is that if your imported materials that are incorporated into your goods are more than 50% of your goods, then they are likely to be treated as non-originating and therefore subject to tariffs. That, of course, will depend on the individual trade deals that both parties have with the country of origin. The other thing that's catching a lot of people out is EU exporters, where you're dealing with a supplier in the EU. Under the trade agreement, they have to be a registered exporter or REX trader in their country for any consignment over €6,000. Now, my experience with dealing with overseas suppliers is that they've not had a lot of information on the trade agreement coming from their particular governments. And so they are kind of in the dark and they're relying on UK businesses to tell them what to do. And the other sort of sting in the tail is that there is a mechanism in there where if either party feels that the other party's goods are swamping their market, they can put a tariff in place if they want to. Ideally with notice, 45 to 60 days, but it can be literally the day before implementation or the effective date itself. Working parties and committees are going to be set up with representative by both parties, the parties being the EU and the UK, obviously, and those are designed to try and smooth the path as time goes on. I think personally it will grow organically. We will find things being looked at in more detail on how to have smoothing mechanisms and things like that to make life easier. No doubt everyone has seen the press with people who've ended up with unforeseen duty and VAT bills, or things being stuck at the docks or stuck on the M20 or at Manston. The fishing market in particular has been badly hit. Those committees are going to be designed to try and find ways to mitigate those sorts of situations. The bit that we've known for a long time and would never have changed with the deal is the import and export declarations, and that in itself has been causing problems. I get 2, 3, 4 inquiries a day about wanting these done because people just can't find the capacity anywhere to have them done, which is great for me and my business, but it does mean particularly the smaller couriers and sort of removal firms and people with small vans hopping across the channel are finding it difficult to do their import and export declarations. You need a UK customs agent for UK declarations, so the import declarations and export declarations in the UK, and a EU one for the other side of the channel. You need safety and security declarations for exports now, and you also need them for imports from the 1st of July, so that's something we've not been used to doing. For those using HGVs through Kent, you will need to have a Kent permit in order to go through Dover or Folkestone, and not having it is a fine of £300. There are permits for other ports, but they're not mandatory. You will also need to make sure that if your goods are of animal origin or plant or seeds, you need to make sure that you've got the right health certificates, particularly on export, and that you know, or your carrier knows, which offices they need to call in to get all of that document sorted. The other thing that I've come across a lot, which hasn't really changed with the trade agreement, is that things like safety of products, electrical products, medical devices, which includes things like prescription sunglasses and things like that, still need regulation here in the UK as well as the EU. The CE mark will be around for quite some time. That's already been agreed that will be effective for a year or so. But other registrations you're going to need to get done by at least the end of this year at the latest. The other area that is causing real problems isn't part of the trade agreement, but is attached to it, if you like, is the Northern Ireland Protocol. And the movement of goods into Northern Ireland or via Northern Ireland is causing real problems because people don't fully understand the rules. Part of that is because the customs area of HMRC and the VAT area of HMRC are tending to palm it off on each other to answer the questions, which doesn't help. So Northern Ireland is causing a few issues, and I know a lot of my clients have said to me, oh, we don't deal with Northern Ireland, and the first order they get in the new year is to Northern Ireland. So I've had quite a few queries on that. Current issues at the border. Software not up to date for the trade agreement. It happened so close to Christmas, everyone was in shutdown. It was like a swan, you know, sort of paddling frantically under the water to try and get things done. The statements of origin and the checks that need to be done have been causing problems. As I said, the language as well. Lack of understanding of the method of transport. I've come across people who have used a code for that doesn't even exist, and I've wondered why their declarations have been sort of discarded or rejected. T1 common transit is a big question at the moment. I get loads of questions for that, and people just don't understand what they need to do to be authorised for T1 common transit. And I've had quite a few well-known names demanding VAT and duty on goods coming into the UK. They are not routinely asking their clients whether they're going to use postponed VAT accounting, which to me is a no-brainer. Who actually wants to have to pay VAT before their goods are released when you can do it on your VAT return? And because there's no statement of origin, or because they don't understand it, they're automatically assuming they're non-originating goods and are having duty charges. So those are things that I'm coming across in a day-to-day sort of situation. There is a lot more. I thought with the trade agreement, when it came out on Christmas Eve, that my conversations about Brexit would stop in the new year, and that is certainly not the case. I spend a lot of my time talking to clients about various things. And cross-border, you know, sort of people are looking at setting up establishments, how they go about that, what they need for it to be considered to be an establishment. And one common myth is you just need to set up an incorporated body in a country. Well, that's not true. If the management and control is here in the UK, you are not established. So loads and loads of different things coming up. The trade agreement has not got rid of the need for a tax representative in every EU member state. There are 12 that still demand that, and some of them are quite surprising. Some of them we could probably guess. So that it's all, you know, still finding our way, particularly for VAT and you know, sort of customs declarations. That's probably all I still want to cover without going into too much detail. Happy to answer questions in the question and answer session, and if there are floods of questions, obviously happy to answer them offline. So that's it from me.
Thank you very much indeed, Ruth. That's brilliant. I'm quite surprised we've only got a couple of questions at the moment. So while people are, I'll read those out in a second, but while people are thinking about their questions, I say VAT is one of the biggest ones that we keep being asked questions on as well at the Chamber. But thank you both of you, Suren and Ruth, for your fantastic presentations and your thoughts as well on where we stand. It's now Q&A time, panel session. We've got not only Ruth and Suren who are staying on, but in no particular order, we've got Alan Bracken, who is a partner at ABTS Logistics, and Alan is also our trainer as well at Herts Chamber of Commerce for various export courses. Some of you may know him from that. But I'm also very pleased to say we're joined by Dr. Brian Stammers, who is the lead EU transition advisor at Hertfordshire Growth Hub. And lastly but not least, Joe Tyler, who is Senior Trading Standards Officer, Regulatory Services, Community Protection at Hertfordshire County Council. So you can see Hertfordshire's really putting together in this to try and help companies. So whilst I've certainly got a couple of questions, I'll just very quickly say, I said mea culpa, I said the next webinar in our series was the 23rd of February. There is one 23rd of February on GDPR, but we've got one before that on the 9th of February covering the workforce and immigration. That's also on 11 on the 9th of February, as I say. So all the details are on our websites. Okay, so I hope that's cleared that up. Any questions, please ask. Right, so let's go to the questions now. One I've heard quite a few times from people regarding rules of origin. What percentage of a product must originate from the UK/EU to qualify as a UK product? That's part one. And part two is then to what extent can labour be valued as added content? Good question. Who in the panel would like to throw their two penny worth in on that one?
I can, if you like, because I've done a few of these. To some extent, it depends on your HS or commodity code, but most of them have what they call a 50% nom-ex-works calculation. So that sounds really fancy and complicated, but basically it drills down to what is the value of your imported materials as a proportion of your ex-works price to your clients. So if your ex-works price usually excludes transport and insurance, etc. So if you are taking, say, an article and somebody's asked about software systems, etc. So if you are building a bespoke server and the racking comes from one country and the circuit boards come from outside the EU, you'd look at the percentage of the cost of the imported circuit boards as opposed to the ex-works price that you're selling to your customer. And if that's under 50%, you can deem that to be UK origin or EU origin if you're in the EU.
Brilliant, thank you. And the second part about the labour side of things, I'm not sure that.
Well, the labour would be part of your ex-works cost. So there's always an element in there if you're, if not everybody sells on Ex Works basis, but if you know what that Ex Works cost is, then that labour would be incorporated in that.
Fantastic, thank you. Next question: are software, systems, etc., classified as materials?
Is that one for me again? It depends. I mean, software itself can be two things. The Americans used a phrase called canned software, that should bespoke off the shelf. Sometimes that is still considered to be goods rather than services. If it's electronically downloaded on the web, then no, software is not. That's a service. That has its own VAT problems. If you're developing a system that involves physical kit, so servers, sort of screens, keyboards, etc., then yes, you have to look at those as being goods. And if you're doing an all-in-one package, again, you have to look at what the predominant supply is.
Okay, thank you. Lynn Boyd. Lynn, are you there? Do you want to unmute and come in and ask your question about CN22? Might be best if you ask that.
Yeah, I was so the products that we sell are manufactured outside the UK and the EU. So on the CN22, it's got China or Romania or wherever they're manufactured. So when we're talking about the country of origin, are they, when it's import, so we then purchase it from a UK country and sell it to the EU. So in Germany, it arrives with country of manufacture being China, for example. So would they treat that as the country of origin being China or the UK?
Country of origin would be China, yeah.
So is that different VAT rules then?
It's different customs rules. It's for duty purposes. The VAT would depend on what the garment is or the product is. So if for instance you're importing children's clothing into the UK, it's 0% VAT, provided it's not trimmed in fancy fur or anything like that. If you're exporting it to Germany, and it's adult clothing, the VAT rate would be whatever the VAT rate is in Germany. I think we're back to 19% in Germany after COVID. But the difference would be the duty. And so at the moment,
sorry, would they be paying duty for it when it arrives in Germany? Would they have to pay duty?
Yeah. Yeah, so the post, I mean, I've certainly seen it coming back this way. The post office will send you the same card as if you're out, but say you have to pay VAT and duty on this. And this is certainly something that has been in the press quite a bit. So I know it's been in the Guardian and the Observer, I think, that people have had unforeseen bills. So somebody had bought, I think, some shells from Next, for instance, in Germany and ended up with €102 added to their bill because those goods, although they bought them from the UK and Next in the UK, had come from China. And so they'd ended up paying the duty on that. So the goods won't be released to your final customer until they have paid that bill. Now, what I've said to my clients is that really, under the old VAT rules, for instance, you used to account for UK VAT until you got to certain thresholds. That's all gone. And it doesn't matter what the value of the goods are, except for those that are under £20 per package. That's slightly different. The €150, £135 bracket that everyone's talking about is for customs duty if it's due. So there's a number of things to take into account. So and that's per consignment, that's not per article. So if somebody has ordered £250 worth of goods that originate in China, they will have a VAT bill and they will have a duty bill, which they need to discharge before they can get the goods. And what I've said to my clients is make sure that is explicit on your website so that there's no surprises and they can't then come back to you and say breach of contract, whatever, wasn't expecting this. You just have to be really open. There's no UK VAT because everything is treated as an export and that's zero rated.
Brilliant. Thank you, Ruth. But questions are coming in quite thick and fast now, which is great. The next one again, Caroline Smith. I think it's probably best, I can read it out. Obviously, it's probably best if you unmute and ask it yourself because it's a bit involved. Caroline. Caroline there? I'll start reading it out. It says, "Hi Ruth, can you answer the following for me? Recently we imported goods from Germany of German origin with an import tariff code of blah. I am of the understanding that there is no duty payable on the HS code, yet I have been invoiced by FedEx for £387.28 plus £20 DPF for goods valued for euros around 21,000.
My answer to that is challenge that with FedEx, because it either means that the invoice from the exporter has no statement on it that FedEx could enter into their software. Because don't forget, everybody uses software. Software is quite binary in a lot of respects, so it will be looking for specific things. The software I use has a team that manually looks at anything that might be rejected, and that's why I've had to go through the hoops of saying, no, you can have it in any language, and this is it. But it does mean that it looks to me like they've treated it as if it's non-originating, and you need to talk to your suppliers to make sure they have these statements of origin on, and B, I would challenge it with FedEx. I know FedEx struggle with some of the VAT rules in the UK, being an American-based company to start with. I've had it on US imports as well, where they've put through an HS code, and I've ended up with VAT on olive oil, which I know isn't the case. So I would challenge it first and foremost, but also check that your exporters are doing the correct things at the other end. It may be because at that value of 21,000, they're not a REX trader, and they should have their REX number on the invoice. So those are all the things to sort of pick up on and challenge with FedEx. And these are all the things that really need to be settled, you know, going along with this trade agreement with all these committees. There's one for the flow of goods and there's one for customs. And the idea is that it tries to make it as easy as possible. But of course, it's a very short time frame. They haven't had a chance to set all of those up. But there will be the ability for businesses to be on those committees. And the trade chambers of commerce will form an important part of that, as will a lot of the professional bodies advising on VAT and things. So yeah, challenge it and see why they've done it.
Ruth, thank you. And I apologise to the rest of the panel. I did warn earlier on that VAT is one of the big ones we get questions on, so I'm being proved. If anybody in the panel wants to jump in at any time to you know, add anything, please do. It's not quite the Ruth show, but this as it is at the moment. First from Harry Watts. Hi Ruth, you mentioned that you recommend the delayed VAT option, but could you give a bit more detail about how the mechanism for that will work in practice?
Okay, so postponed VAT accounting. Number one myth, you don't have to apply to HMRC for it. It's an automatic right to use it, unless HMRC think that you are playing fast and loose with the economy, in which case they'll ban you from using it. But there's no evidence of that at the moment. So all of your accounting software providers should have a specific code for postponed VAT accounting. And the points to note are that in that code, you have a figure for the tax that will feed into box 1 of your VAT return and a figure that will feed into box 4, which should cancel each other out if you're able to recover all of your VAT. And those that can't will know that they can't. Then it should also feed the value of the goods into box 7 of your VAT return. So it's only in 3 boxes your VAT return. Shouldn't feed into box 2 and box 9, which is where they always used to, but it's a very similar mechanism. Now, at the end of each month, round about the first week of the month following when you do your import, HMRC will produce a statement of the VAT that they're expecting to see on your VAT return. You have to sign up for it, so you have to go into the account that you have with HMRC, your business tax account or your online account with them, and in there, and I think it's on the VAT page, is an option called sign up for CDS. CDS, as a lot of you will know, is the Customs Declaration Service, which will eventually be the one that we will all use for importing and exporting, but it's not up to doing the volume that we're experiencing at the moment. But those statements will be produced in CDS. They will be kept there for 6 months, and you need to make sure you download it and reconcile it to what you know you've imported. Beyond that, if you don't opt to use postponed VAT accounting, you will be issued with a request to pay the VAT on import, and then you will get, I assume, and I've got to check it with HMRC, the C79 statement of VAT paid at import, which is the way we always used to do it with all our rest of the world imports up until the 31st of December. And the other thing to be aware of, it's not just your EU imports, it's the rest of the world ones as well, all qualify for your postponed VAT accounting. So you should not, if you're using postponed VAT accounting, have to pay VAT before your goods are released. And you don't need a deferment account for it either.
Ruth, brilliant, thank you. We've got about 10 messages, so we've got about 15 minutes left, so we'll just see what we can get through. But as I said, the answers to some of the questions are so complex. Paul Finch, if we sell a web-based solution to a European-wide organisation, if we trade via a UK subsidiary, are there any considerations for us or our client? Does anybody else want to come into that one, or is Ruth very?
Is it me again?
I think it is, Ruth. Sorry.
Okay, so if you are dealing in what they call electronically supplied services, there are two sets of rules to be aware of. One, we are quite used to, we've been dealing with them for a while, that's where you sell to consumers. If you're selling to people who aren't VAT registered, or private individuals, you will have been used to using what they call the MOS scheme, the mini one-stop shop. You can't use that from the UK anymore. You have to register for the scheme. It's called the non-union scheme in another EU member state. So, and you need to do that as soon as possible. The most popular ones for that are the English speaking ones, that goes without saying. So Ireland is getting quite a few of these registrations. I do have a link for the relevant part of the Irish online registration service if people need it. The other ones that are doing quite well are the Netherlands, because they tend to converse in English with us, and places like Hungary and sort of Poland. But the thing to be aware of with those is if you try and register there, you're likely to need a tax representative. That has a cost to it because they are jointly and severally liable for any tax that you may or may not pay. And so they will charge you a fee for the privilege. Now, we're used to doing electronically supplied services and software downloads and apps and things like that, business to business as well. And the thing to watch out for there is that a lot of countries have use and enjoyment rules, which used to apply only to businesses outside the EU. So if you are doing a global contract and you know that it is going to be downloaded in another country, so even if it's a UK customer that you've got, but you know that that is going to be used and enjoyed somewhere else in the EU, you could have EU VAT registrations that you need to do, and they're full VAT registrations. So just be aware that is a major change. The use and enjoyment of rules apply to electronically supplied services, telecom services, broadcasting services, and other member states have added them. So for instance, we have hire of goods. We also have one repairs under a contract of insurance. So if you've got an overseas insurer, for instance, and the repair is done in the UK for them, for an insured person in the UK, that is subject to UK VAT, which is causing a few issues on the warranty side of things if that's done under a contract of insurance. Some countries have got it for professional fees. So Portugal and France have applied it to professional fees. That's accountancies, lawyers, architects, etc., etc. And some countries have got it for advertising services. So there's a bit of a wider piece there about what services you provide.
Ruth, thank you. I see we've still got 10 messages and about 10 minutes to go, so I'll read out quicker if that's possible. Jacqueline had a really good question. Is there any guidance on preparation of VAT returns that fall between pre and post Brexit? Would we need 2 separate returns?
The answer to the last bit is no. You do it all on the same VAT return. You would need to identify in your accounting system up to the 31st of December and report that under the old rules. So if you've done EU acquisitions, you would put those through as you always did on your VAT return up to the 31st of December. So you may need to do a bit of a cut off in your accounting system. Then from the 1st of January, it's under the new rules. If you've got goods that you paid for prior to the 31st of December but arrive after that, then they are still accounted for under the old rules, because that's under the transition rules from the withdrawal agreement rather than the new trade agreement. So you don't have 2 separate VAT returns, but you will have to identify it in your software.
Brilliant, thank you. Next one, customs do not accept our company as an exporter because they're not based in the EU, even though we manufacture through a toll site in the EU. The customs say only possible way would be to issue export docs in the name of toll site with their EORI number and power of attorney. Export docs can only be created for companies which are based in the EU.
That is, my understanding is that's quite correct. The tolling companies cause real problems for imports and exports, and VAT in particular. But if you're not established in the EU in any way, shape or form, you need to appoint someone to do those for you, to have some form of tax representation.
Thank you. From Peter Jenkin, regarding exporting into the EU, is it true that each EU country will have different rules as to duty and tax? And also the exporter from the UK will be liable for the duty at the destination country?
Some and some. So there shouldn't be any difference on the duty because it's one EU tariff that you're looking at. The VAT rates will vary according to the country that you're importing into. And I've forgotten what the last part of the question was.
And also the exporter from the UK will be liable for the duty.
That would depend on your Incoterms. So, and that's something that we've not been used to in the EU. So your delivery, trading, Incoterms, if you are doing them under DDP, then yes, you will be. You'll be responsible for both the export and import declarations and any VAT and duty the other side. If you are dealing under DAP, FCA or any of the others other than Ex Works, then there is a split of responsibility. And if it's Ex Works, then the purchaser has the responsibility for the import and export declarations. So it's really crucial that you know what your import terms are. There are a lot of EU customers who are insisting on DDP, which is causing a few problems. And it is really, really difficult. And the thing to be aware of is duty is one thing, VAT is the other issue that you're going to stumble across, because you will find that you may have to register in order to get it back or do a 13th directive claim, which is cumbersome. It depends on who is the owner of the goods when they enter the country. So if you're doing it the other way around into the UK, if you are not the owner when you import them, you are not entitled to recover the import VAT even if you pay it. So it is a real mixed bag, and you just have to be really, really careful.
Thanks, Ruth. Next one from Avind. If exporting digital software to the EU, who would be responsible for accounting for the VAT in the EU?
If it's digitally downloaded, for most businesses, it will be subject to the reverse charge for VAT. So you would expect your business, your customer, to account for it. But the sting in the tail is if you are doing a global contract and there is use and enjoyment anywhere under that contract, you may well have to register for VAT in those countries to account for it. If it is digitally downloaded for individuals, like I say, you have to change your MOS scheme or register for VAT in every country, which I doubt that you'd want to do, but change your MOS scheme to another of the EU member states.
This one from, thank you, Ruth. This one from Peter Cabot might give you a rest this time, maybe.
Oh, good.
If you have a cup of tea. Can an event company running exhibitions in the EU take their own staff as set up / take down? This might be more appropriate for the 9th of February event, but does anybody want to come in with that one for a brief answer?
I can a brief answer from my perspective. I think so. Trade fairs and exhibitions are one of those activities that are listed under the visa-free short-term business trips. So although the list is very small, trade fairs and exhibitions are one of those activities that are included within that. However, I would say that one thing you do need to watch out for quite closely is that individual countries will have their own additional requirements. For example, Austria, quite bizarrely, have a requirement you need a work permit if you do market research in their country. So you have to watch out for, well, overall, yes, there may be some country by country differences.
Thank you. I say, Peter, 9th of February.
I mean, there may be a little.
Yeah, right.
A lot of the organisers of exhibitions, the messers in Germany, will insist that things like electrical supply, safety harnessing and things like that are done by their own contractors, not by subcontractors that are brought in from the originating exhibiting company. Just another point about that is that in some instances, trade associations will actually provide support services for companies that want to exhibit in some of the larger sector-specific exhibitions. And there is a list of those accredited exhibitions that is provided by DIT. So hopefully that'll help some of that, answer some of that question.
Okay, brilliant, thank you. I think we might just about get this done, actually. The questions left. Sorry, Ruth, it's back to you again. Do you need to sign up for a particular system to get the postponed VAT statement?
Yeah, through your business tax account or your online account with HMRC, which is where if you do Making Tax Digital, you would have signed up for that, or if you're small enough that you don't use Making Tax Digital, it's where you file your VAT returns. There should be an option that says sign up for CDS. I can't actually say for sure what it looks like because as an agent, I'm not allowed to go into my client's business tax accounts, and the agent accounts are different. So HMRC has done some reasonably good guidance on that with links all the way through, say about accounting for VAT on your VAT return for import VAT. Again, happy to provide Alison and the support team here with the links if people want them. Because if you have to go through the Brexit checker, you lose the will to live sometimes. So yeah, I've had a couple of clients who've managed to do it, said it's really simple. You can then, when you've got them, you can allocate people access to them. So if you need your accountant to look at them or whatever, or your logistics team or anything like that, you can actually invite people in to be able to see them.
Okay, brilliant, thank you. And the last question I've got, Deborah, I've only got Deborah Comp, C-O-M-P, it must be a bit more to that. Deborah, are you still there? Do you want to read out your question? It's quite a long, involved one. Deborah, are you there?
Yeah, hi, sorry.
Okay.
Yeah, no, it's that we send a raw material to a toll company in Germany, and the material is Indian origin, and it goes to Germany. It gets added with other raw materials that the German toll company actually source, and then we get it back to the UK as a finished product. So I was just wondering how that works for the export out, being it Indian sourced raw material to Germany, because normally you'd have to pay duty on that, but the fact that we're actually just exporting it out to get reprocessed and then bring it back in.
Okay, well, the key to that is the word processed. So there are reliefs called outward processing relief and inward processing relief. Now you have to be authorised to use them from HMRC, but what outward processing relief will allow you to do is to send the goods abroad to be processed and then returned. So it's probably worth looking at, and that way you know it all flows through and there's nothing sort of changes hands in terms of VAT and duty, and then it depends on the origin when they come back into the UK.
Yeah, because recently we had this, and basically our supply chain got asked what code to put on it by the freight people.
Yeah,
you know, there's CPC code, but I mean that's something that the freight people should know, isn't it? Not the company.
no, it's not actually. It is actually the responsibility of the company to know the customs procedure code and the commodity codes or HS codes.
Mm-hmm.
I know a lot of freight companies have been told not to provide advice because it's actually outside their remit to do it. It's a bit of a moot point. A customs agent would probably give you the advice, or a customs specialist. But it is very, very detailed. You do have to apply for it, and then once you're approved for it, you can use the relevant customs procedure code, of which there's quite a few, depending on exactly what you're doing. But it's certainly a discussion to have with someone who's a pure customs specialist rather than just not just a freight agent, because they have a very important role because they get your goods from A to B. But it's probably a discussion that you need to have in more depth than your freight forwarder would be able to give you.
Okay, that's great. Thank you.
Lovely, thank you so much. There's a last question here from Jake Stock about the session being recorded, as he unfortunately missed the first 20 minutes. That is being answered in the chat, but yes, as I say, it is being recorded and will be available on our website, Herts Chamber website, probably by this afternoon, I'd have thought. But Jake, I'll drop you an email and let you know where that is. Thank you so much, Ruth. You must have worn yourself out there, run through several cups of tea. Really, really quickly, Joe and Alan, I know we haven't really involved, which I'm sorry for. Do you want to we are just about 12 o'clock. Do you want to say just a couple of very, very quick words just to bring you in? Thank you for your time. Joe, Alan, which one first? Joe.
Yeah, hi everyone, Joe Tyler from Hertfordshire Trading Standards. I've just put in a link in the chat just to a page that we've partly created with the Growth Hub, just about, I guess, what we do, the new regulations that Brexit has brought in, and the various changes that we're looking at. More to do with sort of manufactured goods. So we deal with sort of cosmetics, toys, things like that. So Ruth touched on CE marking changes that are due to come in. There's a period. Again, it depends on where you import and export to. There's a specific marking now for Northern Ireland. So it does complicate things. We also deal with food, art. I think Ruth might have touched on the need for export health certificates, which is actually something that falls under the remit of our colleagues in environmental health. But the link in the chat that I'll put together sort of brings everything together. So hopefully that helps anyone in the future.
Brilliant.
I'd just like to
John,
follow
may I
up on
make
that,
an
actually.
observation here, please?
Yeah.
Just to say that one of the things that the Hertfordshire Growth Hub EU transition team is trying to do, and we now have 5 advisors that are on board as of the beginning of this year, is to untangle the very things that Alan has just made up.
Wonderful.
What we have is a whole list of stuff, some of which goes back 5 years or more, which really needs to be taken off the list of things that people need to look at.
Yes.
It needs to be updated, and we have a tool chest that we're putting together now which does exactly the things that Alan has asked for it to be done. It takes time.
Wonderful. Yeah, I appreciate that, Brian.
I'd like to echo that, and I'm going to come to the defence of HMRC, which I don't do very often, I can tell you. Part of the problem is that all the transition information has been drafted by the Cabinet Office.
Yeah.
And I spoke to Lord Agnew on behalf of SMEs because I was so incensed with what was going on. And he had a couple of interesting views, neither of which I particularly agreed with. But one was, what do you expect us to do 6 weeks from the end of transition? And I've been trying to get this appointment since March in 2020. And his second one was, well, people like you should see it as an opportunity, which is not the way I do business. So that is what we're dealing with. If I look at the VAT guidance, the VAT notices have been kind of updated, but the VAT manuals, which the officers are using, have not. And they just have a caveat saying this needs to be updated. So in HMRC's defence, I think a lot of it was done without their knowledge. And certainly last year, the direction of travel was the Treasury and the Cabinet Office were issuing things and HMRC were having to sweep up behind.
Yeah.
Well taken, and thank you.
We're all playing catch up, and that's brilliant. Thank you. We must close. Can I just direct everybody to the chat side? Ruth, Suren and Joe have all put really helpful links down there, and Jenny has mentioned there'll also be an on-demand event on the Hertfordshire Growth Hub website later this week, which is in partnership with Trading Standards, covering some of the points that Joe mentioned when he had said his few words as well. I think so. We are really running this tight now. Thank you very much indeed to, in particular, Suren and Ruth, for your brilliant presentations and assistance with this. Also, panel members, sorry, didn't all get a chance to speak. Thank you all for participating. I think it just goes to show this conversation, these questions are just going to go on and on and on. There's an awful lot out there. We're here to help. Hertfordshire Growth Hub's here to help. We have Hillier Hopkins, of course, BCC, Alan, everyone, and Joe all around in Hertfordshire to help out. So please do contact us if you need anything. I think it just leaves me to say thank you again to you all. Have a lovely rest of the day with the snow melting out there, I think, at a rapid rate of knots. And we'll see you all on the 9th of February for the Workforce and Immigration one, if not before. Take care, everyone. All the very best.
Thank you.
Thank you.
Bye.
Goodbye all.
Bye.
Bye.
Bye.